Yeah, so I see people coming in. So thanks everybody for coming today. Yeah, we'll begin very shortly. Talking about dollar yen today. Yeah, okay, I guess we can begin. So today we'll talk about dollar yen, very exciting currency pair. Lots of you have discovered it lately. Some of you have been trading it for years, or perhaps looking the other way for years. Anyway, my name is Yohay Elam. I'm a senior financial analyst at FX Street. Just a few quick words about myself. I used to be a retail trader and a computer programmer. I founded Forex Crunch back in 2008. I'm an analyst with FX Street since 2018, focused mostly on fundamental analysis. That's what we will be doing today. And I'm leading FX Street's premium content offering. So just to talk a bit about premium. Here we are, with the premium offering. Just a moment here. So let me just share the link of the premium with you if you want to sign up. We are providing tools for traders to trade with confidence. So here's the link right here if you want to sign up. And we're helping you staying focused, being disciplined, trust your own method, help you identify the best market opportunities, execute your own trading plan. Eventually, it's up to you, and train you to be that professional trader that you always want to become. Here is my colleague Tomas Reyes and myself. We will guide you through the journey, in-depth analysis and strategies. We provide also daily trading alerts and signals analysis, strategies, and economic data and events. And except this webinar, there are around more than 4,000 recordings way back to 2007. So we've been here with traders for quite a long time. Okay, and the newest addition to our offering is Trading Studio, where we provide answers to your questions and other stuff to get access to our analysts. Okay, so you have the link there if you want to sign up. I'll also remind you at the end this short little pitch, but yeah, let's kick it off. Today we're going to talk about dollar yen. This is the latest monthly chart, looking at all that action in this crazy currency pair. Sometimes crazy, sometimes it isn't. Anyway, I see more people joining. 5 things we're going to talk about today about, safe haven. We're always talking about the yen as a safe haven. So we'll discuss when it is a safe haven and when it isn't exactly that safe haven. Okay, the role of the Bank of Japan, very active recently, but there's a history there. Trading economic events around dollar yen, and then the correlations with bonds and stocks. We're talking about many correlations, and its volatility, which has been crazy lately, but it's not always the case, right? Okay, so topic number 1, the thing number 1, is it a safe haven? Well, it has a reputation of, it's more of a repatriation currency. It's a currency that people lend in the good times, and then the bad times they run back. So it's not a safe haven, just a currency that you rush back into after you've done some funding. Japan today is the West of tomorrow. It's not necessarily a good thing. Population in Japan is, the median age is 48.6. The population is aging more than any other country, more than Western countries. So Japan has been a pioneer in good things and bad things, of course. So that's why it's always been way there. The workforce is shrinking. Relatively few immigrants in Japan. So all in all, we're seeing an elderly population. That means slower growth and slower inflation. So we're seeing, we had a bubble in Japan in the 1980s, it burst in the 1990s. All those electronic companies, real estate, and Japan entered deflation. That means when prices fell and the economy got stuck, the stock market got stuck, everything didn't go anywhere at all. So what happened is the Bank of Japan began printing money relatively early and had very low interest rates very early. When you have low interest rates, what do? You lend money in cheap currency and you use it to fund riskier stuff abroad, okay? to lend money in yen and buy other stuff. Okay, but so it's when a positive risk of buying assets abroad looks good in the good times, then suddenly things worsen and money flows back into Japan because you undo the trade. So it's a repatriation currency more than a safe haven one. And this is a famous carry trade of around 12, 13 years ago. I don't know how many of you have been around trading and you remember that. We had this Aussie yen and Kiwi yen, big differential in interest rates. Interest rates in Japan were just 0.5%, and in New Zealand they were 8.75. Okay, so just lending in yen, depositing money in New Zealand, that was a great trade. Okay, for while it lasted. All right, and then came the big financial crisis, and everything was undone, and everything crashed very, very quickly. So that's the famous carry trade, easy interest rate gap until everything blew up. Okay, another case of safe haven was this horrible earthquake, tsunami, and nuclear disaster back in March 2011. Just been 11 years, that horrible event. Fukushima, if you remember. So money flowed into Japan. It flowed so much into Japan that central banks from other countries intervened to push to weaken the yen to help Japanese exports because, well, it was a huge disaster. But even though the big trouble was in Japan, really a terrible tragedy, money still flowed into Japan. So that's sort of what makes things, that's safe haven currency, even if trouble is in Japan. Now, as we've seen recently, and also in other cases, it's mostly a safe haven repatriation currency, but it's rushed to the yen in times of trouble when the trouble is in Asia, okay? So we're talking about that disaster in Japan, talking about risks about China invading Taiwan, okay, which now seems to be growing after Russia invaded Ukraine. That's the picture we're seeing here. And also when China and the US had trade wars, and also when North Korea, when Kim Jong-un fires his missiles, Rocket Man, then we're seeing the Japanese yen strengthen, even if these missiles fly over Japan. All right. So, yeah, but now we're seeing it with the Russia-Ukraine war. It's not affected that much, okay? So it's when you hear the Japanese yen is a safe haven, not when the war is on the other side of the globe. Okay, so that's safe haven when the Japanese yen is a safe haven and when it isn't. Okay, let's talk about the role of the Bank of Japan. As I mentioned already earlier, it's always been a pioneer. Okay, had a huge role in reviving the economy. Part of Abenomics. Shinzo Abe, one of the previous prime ministers, he ruled Japan until 2020, the longest-serving Japanese prime minister. Well, this is not his picture. It's a picture of Haruhiko Kuroda, the governor of the Japanese central bank, the Bank of Japan. Anyway, Shinzo Abe wants to reform the economy. He had 3 arrows. The most successful arrow was the Bank of Japan, just printing a lot of money, buying a lot of bonds, buying stocks as well. So it's really a role in changing the mentality of Japanese consumers, of getting them to the growth mentality. There was also fiscal stimulus and also some reforms, but these didn't work out that well. It was sort of meant to change the way of Japanese thinking. So when we're talking about inflation in all over the world, I don't know how many of you like soy sauce. Well, Kikkoman is one of the biggest brands. When the company behind it raised the price in Japan by 4%, okay, absolutely not a tragedy. So we had a public outrage. So the Bank of Japan is seen as a defender. It has an important role as a defender of Japanese exports. Okay. The role of the Bank of Japan is, well, to buy everything. It pioneered, as I mentioned, zero interest rates before the Fed, QE, quantitative easing, or buying long-term bonds. And the most recent invention is yield curve control, when they don't only buy bonds to lower interest rates, long-term interest rates in general, and send a signal to markets, but they have a target for that. They want to keep 10-year yields around zero. That's why recently they intervened. When all other central banks are either raising rates or talking about raising rates, fear of inflation, the Bank of Japan intervenes in markets to keep the yield curve depressed, okay? So yeah, maintaining yield curve control, it's like QE plus, like the next level of bond buying. It's also active in the stock market, buying ETFs and other stuff. So really, the role of the Bank of Japan is critical. You should basically only listen to the Bank of Japan. It's, as I said, the only major central bank now that is easing its policy, while others are raising rates. Inflation remains very low in Japan. I mean, it's almost 8% in the US, over 6% in the UK, around 7% in the Eurozone. In Japan, it's maybe 2%, okay? So it remains really, really low. No inflation, more than slowflation. When inflation does reach Japan, when the Bank of Japan does raise interest rates, that for me is a sign that for me is a contrarian sign. It's a sign that it is swimming against the current, like this fish here in the picture, and the other central banks will be first in lowering interest rates, maybe the Fed. So that's what happened also in 2007, 2008. The Bank of Japan finally had the chance to raise interest rates, but it was very much at the last moment before the Bank of Japan and everybody else set them to zero and they began printing money. So we can use rate hike from the Bank of Japan as a contrarian sign. Okay, let's now talk about economic events. What economic events should we watch out for, and what should? Well, first of all, let's talk about what we shouldn't be looking out for. Economic events in Japan. So these ones can be totally ignored. I'm talking about the unemployment rate, irrelevant. So we have non-farm payrolls, always a big event in the US. In Japan, it's absolutely irrelevant. Same with retail sales and basically most others. First GDP release maybe has a bit of an impact, maybe 3 pips. But it's unreliable. It's usually contradicted by the second release. So anyway, it's mostly ignored. And only inflation is worth watching out for. It hasn't been moving the yen so far, but maybe if it does rise in the future, I wouldn't rule out that it moves the Japanese yen. But basically, if you're trading in the Asian session, you don't really need to follow economic releases from Japan. And if you're here in Europe, like myself, and you're sleeping during the release of Japanese figures, it's all right. You can have a good day. Okay. However, the guy here has a good reaction. We're seeing a good reaction to U.S. events. Okay. I would say even the best reaction for several reasons. Well, both currencies are sort of perceived as safe havens. Okay, so they offset each other. We also get a correlation with yields. We'll talk about that a bit later. It just, from my experience, tends to have the best, most reliable, most consistent reaction to U.S. economic events. Okay, it's the right direction. It doesn't do crazy stuff. Sure, with non-farm payrolls, we sometimes have crazy stuff, but the Japanese yen, it's much less than other currency pairs. So if you want to trade U.S. events and you want to filter out noise, I would say this is the best. Okay. See here we have a question. So maybe very relevant. I'm sorry, I forgot to stop for questions. When is the dollar yen most active? Is it hours? Well, what hours is it active? It is most active in the overlap between the European and American sessions. When it's morning in America, when US data comes out, that's when we have action in the dollar, and that's when we have action in dollar yen. Sure, in the first session of the week, first Asian session of the week, we do have some action because markets are waking up. So, well, when Tokyo comes in, we have a little bit more of market movement, but I wouldn't say it's only dollar yen. I would say it's in general. Okay, so yeah, it's the Asian session in general is quieter, and that includes dollar yen. So we don't have a boost for dollar yen volatility in the Tokyo Open. If we have a boost, it's for all currency pairs. So really, dollar yen moves most around the beginning of the US session. Hope that answers your question. Please feel free, everybody, to ask any questions, especially, yeah, just go ahead. Okay, so back to what I was talking about. Dollar yen picks the right direction, tends to, at least in response to US events. I would prefer also dollar yen because other currencies are just more complicated. So the Eurozone, the euro is backed by 27 countries. So there are always sort of so many moving parts around there. So many European issues. Well, now we also have the war here, but in general, it's more complicated. The pound is just volatile. It's sometimes a bit crazy. It just moves very choppily. It can erase your stop loss points. And the Canadian dollar, Australian dollar, and New Zealand dollar, they're all risk currencies. So if we have looking for the safe haven, not safe haven, we can have these kind of contrarian moves. And we don't see it in dollar yen because both the dollar, let's say dollar is the number one safe haven, and the yen again has a more limited role as safe haven. They sort of offset each other, and the reaction to US data is far cleaner. All right. Yeah, I would say the only worthy competitor as safe haven is, at least now when there's a war in Europe, is the Swiss franc. Okay, we always have the risk of the Swiss National Bank intervening, but perhaps dollar Swiss is also a candidate to trade US events. But I would say dollar yen is still has the best reactions. Okay, let's move on. Yeah, so which US events now are the most important ones? I would say non-farm payrolls. It's been only 3 days since the latest release, but it's not the most important one at this exact point in time. Always lots of action, lots of hype around it, but now inflation is much more important. CPI inflation released, next Tuesday, if I'm not mistaken, April 12th. That's the most important US event because inflation is high. It's what moves the Fed, so watch out for inflation. Still, non-farm payrolls, I would say, is number 2 in terms of US events for trading with dollar yen. And then GDP, even the second release, the first release is more important than the second and the third, but also the second release has some impact on dollar yen. So I would say it's also a good candidate to trade. And retail sales, with all the focus on inflation. Now, to be fair, retail sales last time it was released was on Fed Day, so it had little impact, but usually it has more of an impact. So I would say this is the order: inflation, jobs, growth, and then retail sales. Consumption is still critical. These are the best events to trade dollar yen with. Okay. Oh, and I forgot one last one, durable goods orders. It's a long-term investment. It feeds into GDP. And yeah, especially the release for the first month of the quarter. So the release for April would be the best. Okay. Yeah, let's talk about correlations. There are lots of, well, let me just stop for a second. Any questions so far? Fear that I'm running too fast through everything. Would you, here, yes, we have a question. Would you recommend trading this pair with another currency such as pound yen? Yeah, I mean, US events, trading them with pound yen. No, but I would say there is an indirect impact. So if we're in a risk environment, people are afraid of the war, for example, and we have a strong US figure, we would see the dollar rising against the yen. But I don't know. I think I was going to ask about correlated to yeah, regarding events. Yeah, I would say it's better to trade dollar yen. I mean, around US events. If you want to eliminate want to be a bit more focused on technicals and less on news events, then pound yen is a good choice. I mean, around US events to avoid the noise. But there's always some impact because the dollar is traded in 87% of transactions. Okay, then you can't really avoid influence of US events on pound yen. Hope that answers the question. Let's move on to correlations. The best correlation is with US Treasury yields, and especially with Fed events. Here's Jerome Powell as Superman and one of those nice memes. US events, just direct correlations. When US yield, especially the 10-year Treasury yield, when they rise, usually dollar yen rises, and the other way around. The moves tend to be much stronger when, moves in dollar yen, the correlation is stronger when the moves are sharper. So if we have just 1 basis point moving over 3 hours and then another basis point, and then one moves back, and then we won't see a big correlation, we won't see a big impact. But when the moves are strong in reaction to events, then we see a very good correlation. So if you're trading dollar yen, especially around the Fed, look for Treasury yields, for 10-year yields to lead, and dollar yen to follow. And another curve to look at, another bond yield to look at is the 2-year yield. It's also gaining importance, but I would say the 10-year yield is sort of the global benchmark. So it's number one. Okay. Let's continue. US stocks. There is a direct correlation between US stocks and dollar yen. I mean, you can see it. It's not as strong as with yields, but in general, when the stock market rises, dollar yen rises, and when they fall together. Again, when the reaction is better when moves are sharper. And I would say it's secondary to yields. So stock markets get lots more attention, they're more exciting, but yields is where you should look for better correlations, for signals about how currencies will move. Because bonds are heavier, but they move first, and they have a longer lasting impact. Okay, where not to look. I would say there are no more, at least in this point in time, no correlation between the dollar and oil. So if you see a big move in oil, there used to be an inverse correlation, higher oil, weaker dollar, and the other way around. So if you would see the dollar fall, you would see oil rise. I would say oil is in its own game now with talking about bans on Russian imports of oil and what's going on with OPEC plus and demand and COVID in China. It's sort of totally, oil is in its own world, crazy world for itself, and the dollar is unrelated. So don't look for oil and dollar yen. Yen is not correlated to Japanese bonds, as I mentioned earlier. Japanese bonds are controlled by the Bank of Japan. I mean, the yield curve there is controlled because that's their policy. Yield curve control, YCC. And Japanese stocks, basically they move in tandem like most stock markets. All move sort of with each other. And of course, they move by individual companies. So if Toshiba or Mitsubishi have better earnings, we'll see the Nikkei 225 rising. And that could be unrelated to what's going on with Google or Apple. So in general, it's unrelated to dollar yen. So I also want to mention where not to look. Okay, and last but not least, factor number 5 tends to be binary volatility. It's either crazy or dead. There's sort of no middle ground, and it tends to move for long periods of time. So it's not euro dollar where we see sharp moves, then stopping a dead cat bounce in many cases with euro dollar, or with pound dollar, which can be crazy stop. I mean, schizophrenic personality. But with dollar yen, it's either boring for a long time, very limited range trading, or moving like now in a huge trend. Okay, so it tends to be binary. In general, range trading can be unexciting and a bit narrow. So you would need very low spreads with your broker to trade dollar yen when it's in a low volatility environment, and you need a lot of patience, of course, to trade these mean reversions, trade these ranges. Yeah, and on the other hand, when it's trending, it can stay oversold or overbought for long periods of time. So here we had this recent rally in dollar yen, and sort of nonstop. Most charts you would see the RSI above 70, above 80, and it didn't matter. Dollar yen remained strong and breaking all technical levels, all the charts for a long period of time. So that's another characteristic of dollar yen. When the yen does strengthen, beware of Bank of Japan jawboning. So BOJ, jawboning sort of goes together. And jawboning, talking, they usually begin with verbal intervention and settle for that. They know it's hard for them to move to weaken the yen. Now we're in an environment where the yen is weakening for other reasons. So they're probably smiling inside and not talking about it. But markets do tend to react when the Bank of Japan said it's worried about excessive moves in currency markets. That means they don't like the yen strengthening. And that tends to have a sort of knee-jerk reaction on dollar yen. Okay, yeah. So when nothing happens, they smile quietly. All right, that's it for what I've presented for you. This is for those of you who are not. Oh, let's answer a question. Based on Bank of Japan's policy, would you recommend going long? At this point in time, well, I don't want to provide trading advice, but the longer the Fed talks about raising interest rates twice by 50 basis points in May and in June, the Bank of Japan insists there is no inflation never coming to Japan. I would say we had this correction already. I would say there's more room to the upside for the next few months. There's always the risk that the Federal Reserve will say, "Oh, we went too far. Inflation is fixing itself on its own. There's a risk of recession in the United States, and then things can reverse." Or if inflation reaches Japan, which is much less likely, so I would say in that case there's a change. But I would say that for now there's more room for the upside on dollar yen for some time. I see another question here. I see questions in the thank you very much for your kind words. I see questions also in the Q&A. Where do you see dollar yen in the coming week, month ahead? Week and month, I would say up. Year, I would say, I don't know, but I think after a few months, somewhere in the middle between 1 month and 1 year, I think we'll have a significant downturn because the Fed maybe will stop, but maybe that'll come only in summer here in the Northern Hemisphere. Why yen such a weaken in March instead of fiscal? The fiscal year ends, I forgot to mention that. Fiscal year ends in Japan at the end of March. So it just ended last week. It caused a bit of choppy action. It's always something that we commentators like to use when explaining crazy moves at the end of March in dollar yen when we don't have a better explanation. But it's not such a big factor. The Federal Reserve is a much bigger factor. Bank of Japan is a much bigger factor. Problems in Asia, bigger factors. I see you guys are thinking, well, you're welcome to ask more questions, but I'll just take the opportunity that received a nice compliment here in the chat, and I'll say that you're welcome. This is an open webinar for everybody to join. I see quite more than usual, quite a few people. For more such webinars, for insights, for trading signals, for lots of good stuff from my colleague Tomas Esayes, from myself, from other people, from Ed Ponzi, who gives amazing webinars, and many other people. Welcome to join our premium service. Sign up here. I'll share it in both the chat rooms and and write out in the other chat. Anyway, I put it in the chat, not in the Q&A. So you're welcome to sign up. So my short sales pitch, and we have more premium content like this and more over there. Any additional questions? I'll say again, for those of you who are signed up, welcome to visit to see all the content we have for you in Trading Studio. You're welcome to ask us questions and ask our analysts, and follow me personally at Forex Crunch, and visit fxstreet.com. Oh, I see another nice comment. You're great. Can you repeat what you say about Japan for the future? Do you say no more upsides, meaning it's about to drop? Well, I think dollar yen has more room to the upside. That means the yen has more room to the downside. I'm talking about the next, in the next 2 months or so, as the Fed is set to raise interest rates to go very hawkish against higher inflation in the US, until they might stop to think, wait, this might be too much. There's a risk of a recession because of China slowing down due to COVID. Russia-Ukraine war, which is still going on. I mean, it already created a lot of damage. Even if it stops tomorrow, it's horrible in terms of human lives, economic damage, everything. At some point they'll stop, and at some point the dollar, I would say, fall, and that's when dollar yen will fall. Again, there's a good correlation between the Fed, US 10-year yields, and dollar yen. Yeah, hope that answers your question. Another question here: what is the biggest fundamental to track for this pair? Does the Japanese gold rate influence it? Biggest fundamental to track, most important economic figure is the US inflation, consumer price index, CPI. I think it's the most important one at the moment. In terms of events, it's what Fed officials say. Okay, so I would say that as well. And then we have everything going around China. I think more impactful than the war in Ukraine for now. If China announces more lockdowns, I mean, that's bad for the global economy and could trigger a fall in dollar yen. If they change their policy, like many other countries did, then it'll be positive for dollar yen. So I would say these are the most important factors. Of course, the war, if the war ends, hopefully the sooner the better, then dollar yen has room to rise. Okay, so yeah, as far as following the war very closely, and negotiations are going nowhere, but let's hope for peace. Any more questions before we wrap it up? I guess not. Okay, my next webinar will be a closed one to premium members only. Again, you're welcome to sign up to the service. We have many more things, not only webinars. Anyway, hope you've learned something today. This webinar, in any case, is recorded, and you can see it if you want to relive it. And we have the last question, I guess, on euro yen. Well, yeah, the euro is suffering from the war, and the yen is suffering from the Bank of Japan's contrarian policy of not going hawkish. So thanks for that poem as well. Forgot to mention a few other experts: Sam Evans, Naveen, Ed, Walter, and many more. And regarding euro yen, I think at the moment it has more room to the upside because of the fall in the yen, because the yen is so different. I think euro yen can rise, but it has limited room. Because every day that passes and the war continues in Europe, there's going to be a recession here in Europe, and the yen can benefit from that. I would say it's a bit more complicated with euro yen. The European Central Bank is unlikely to raise rates very soon. So yeah, so if I'm bullish on dollar yen, I'm a bit more neutral on euro yen. Okay, so that's it for today. Thank you very much, everybody, for coming. I hope you learned something new. You're welcome to sign up to the premium service. You have all the details of the premium, the different pricings on the link I just I shared. Let me share that again, just in case it's previous messages. So here it is. Again, thank you very much, everybody, for attending. Went a bit over time, but it's my pleasure. And yeah, have a great trading week and hope to see you soon. So that's it. Thank you very much and bye-bye.